In this video, I'm going to be discussing the auto deduction and the tax strategy that you should be putting in place to save you thousands of dollars in taxes. Specifically, I'm going to answer about 6 questions, and those questions are, does the vehicle need to be titled in the name of the business? What's this whole sort of thought process of, that vehicle is a business write-off, and so my business pays for it? What are the different methods that you can use when using this strategy? How do you stay in compliance when using it? What are business miles versus commuting miles? And how do you handle the accounting when you actually implement this strategy? So for those of you who don't know who I am, my name is Navi Miraj. I'm a CPA that specifically helps real estate professionals. So that's your real estate agent or realtor or broker even. But this video applies to the auto strategy, which can apply to all small businesses, not just those real estate professionals. If you watched my last video about tax planning, we talked about how the auto deduction was sort of under the category of maximizing your deductions. If you didn't see that video, it's just yet another reason to subscribe to the channel so that you'll see all the future videos that I create, because the idea is that they're going to sort of progressively get you into the most tax efficient, structure and making sure you're taking all those deductions, and the videos will sort of help you along that process. So let's sort of tackle these things all in a row. We're going to hit those 6 sort of questions I opened up the video with, and also I'll explain sort of what this sort of triangular looking thing here looks like. But does the vehicle need to be titled in the name of your business? I get that question all the time, and the answer is no. And quite often it's pretty rare for me to see the business put in the title. And that's because it's usually doesn't occur unless that vehicle is going to be used 100% for business, not 90%, 100%. So usually you would see that when, let's say, for example, you have a construction company and you see a vehicle that legitimately looks like it can only be used for business, right? So you're not going to see a construction worker taking someone out on a date in that commercial vehicle that has a cherry picker on it and some cones up in the front of the vehicle, right? So that's when you tend to see 100% business use out of a vehicle. Keep in mind that there are situations where a non-construction company would have 100% business use, but that's typically when you have your primary vehicle, and then you also have this second or perhaps third vehicle that you only use when you're doing your business activities, okay? Also keep in mind that if titled in the name of the business, that you may incur higher auto insurance premiums, but it's best to check with your auto insurance agent to see if that holds true for you. Another issue that may arise is if the if the vehicle is in the name of the business, then there are issues that may arise when you do actually use that vehicle for personal commuting. So no, it doesn't need to be titled in the name of your business. So the second question is, what's this whole thing of a write-off for my business? This vehicle, this cool BMW or Mercedes or whatever that you see here is a business write-off, so I don't really pay for it. That's just a misconception out there. Even when I was younger, I heard people sort of say that phrase. Again, even when I worked in the banking industry, I kind of heard that phrase and I was like, oh yeah, that's definitely something I want to do. And so that's just not really true. Many people have the wrong idea about this. You really should be only buying a vehicle or really incurring any business expense if you actually need that item. So one of my first questions that I would ask a client who wants to buy a new vehicle is, do you need this vehicle? Because if you don't, you shouldn't be buying it. So why is that? Because it's at the end of the day, if you purchase something that costs $1, and so you have a business expense of $1, that's going to save you the $1 times whatever your marginal tax rate is. So even if you're in a very high interest tax bracket of 35%, for example, if you spend $1, you're going to save 35 cents. So why would you do that, right? Why would you spend $1 to save 35 cents? You wouldn't. You would do it if you actually needed the vehicle and you're in that high tax bracket. Well, then buying the vehicle in that year would save you sort of 35 cents on every dollar, right? or there is some tax planning involved there. So if you're going to be in a high tax bracket next year and you're in a tax bracket this year that's much lower, and you're going to need that vehicle, come early next year, then maybe you purchase it now when you don't need it, but you're going to need it very soon. And the opposite holds true as well in terms of the timing of when you would want to purchase that vehicle. All right, moving on to number 3, the different methods that are involved and which one should you use to deduct the auto expense. So honestly, it's impossible to answer this question without an individual consult. So you can either reach out to me or to your tax professional to get guidance on your specific situation. But in general, there are 2 methods that you can use when implementing the strategy. One is the standard mileage method. The other is the actual method. And so the standard mileage method kind of works like this. The IRS assigns a mileage rate in 2020 that's 57.5 cents per mile that you can deduct for every business mile that you drove. So if you drove 10,000 business miles in a year, you multiply that by the 57.5 cents and you get $5,750 as a tax write-off or a business expense, if you will. And so if you did 20,000 miles, then it would be double that, right? Closer to $12,000. And that IRS mileage rate of 57.5 cents is covering for you depreciation, maintenance on the vehicle, gas, car washes. All of that is built in to that 57.5 cents. That's why it's so high per mile that you drive. If you use the actual method, you, or probably better so your accountant, will be keeping track of the depreciation expense, but you should be keeping track of the gas that you use, what your lease payments are if you lease, auto insurance, repairs, etc. Pretty much, tires, all that stuff, oil changes, all that you should be keeping track of. And what you'll do is you'll use the business use percentage of all those actual expenses that you incurred to determine what your deduction is. So, which one should you use? One of them sounds pretty tedious, right? So it's again, almost impossible to discuss which one you should use in a video like this. It really deserves a one-on-one consult. But some general advice that I'll sort of give you is, if the vehicle costs $40,000 or so, or less, and you drive that vehicle 12,000 miles a year for business, 12,000 or more miles a year for business, then very likely that the standard mileage method is going to be the best for you. Now, if that same vehicle costs $60,000 or more and you drive it probably 6,000 miles or less, then the actual method is likely going to be a better method for you to use for your vehicle. So the math behind those general guidelines that I just gave are sort of outside the scope of this video, but generally those sort of rules hold true. So how do you stay in compliance? Compliance is sort of like the 4th item that I have here. So you should be keeping a log. In the old days, someone literally had a physical log that they would keep track of in their vehicle each time they commuted. But nowadays, with the technology that we have, most people just track this using an app. And so that app could be built into your QuickBooks subscription, or it could be another app like Mile IQ, for example, is a popular one. But you would track that through an app, and you would maintain that app each week. What I mean by that is, don't go 6 months and then try to go back in the app and decide whether that was a business trip or a personal trip. Try to do that at least once a week. And again, keep receipts for if you use the actual method. Those receipts, like I mentioned, the oil changes and tires and things like that, you need to keep track of all those expenses. So what's the difference between like business miles versus commuting miles? So in my home office video that I created, I hinted that establishing the administrative home office ties into the auto deduction. And so now I'm going to give you an idea of what I meant by that. So again, all of my clients are real estate professionals, so I'm going to kind of use an example catered to them. And so, if you look at this sort of diagram here, the H represents your home office, right? And so if you've established that administrative home office, then sort of what's depicted in the green color here is you make that trip to your brokerage office. You go from your administrative home office to your brokerage, from your brokerage to a showing, and then from a showing to, let's say, dinner with a client in the evening, and then back home, then you can deduct all of those miles as business miles. However, if you don't establish the administrative home office, then sort of what's depicted here in the red applies, meaning that first trip to the brokerage is a commuting mileage, it's not business miles. So you'd only be able to deduct the miles from location 1 to 2 and 2 to 3. And then again, when you come back home from that third appointment, that's also considered commuting miles. So that's why it's critical that you establish the administrative home office to also then maximize the deduction you could receive for the auto mileage. So the next thing that we're going to cover is the accounting behind all of this. So how do you handle that? So if your business is taxed as an S corporation, and if that's confusing you already, go watch my other video about the different sort of legal entity types and their tax structures. But you would administer this via an accountable plan. And so I wouldn't be surprised if the first time you heard of this thing called an accountable plan. A lot of accountants, even CPAs, are not giving their clients this guidance, right? And so basically what it means is if you have an LLC taxed as an S Corp or a corporation taxed as an S Corp, again, if that's confusing you, subscribe to the channel, watch my other videos because I explain all that in some of those videos, but you should be administering some of those sort of what I refer to as hybrid expenses via an accountable plan. And so, the accountable plan is sort of outside the scope of this video, but I will produce a video with those details in the future. But for now, think of it like this. If you're an S Corp, you are sort of an employee and you're sort of an investor in your business. And so you should submit really an expense report, if you will, to your business for expenses that you incurred that were sort of personal in nature, or I should say get billed to you personally, but have a business nature to them. So that would be like the auto expense like I'm discussing now, home office, perhaps your personal cell phone, and maybe your home internet are some common ones where they're billed to you personally, but you get a business deduction for them. And so you would sort of use the accounting plan vehicle to reimburse yourself properly. So, like all of my videos, I just want to make you aware of these things so that you can have a consult with either me or your tax professional. I can't really get into all the details here in this video. So implementing this strategy with an S corporation, again, you should probably using it an accountable plan. If you're taxed as a sole proprietor, it's a little bit easier for you. You don't necessarily have to do the accountable plan thing. So if you got value out of this video, I ask that you please do subscribe because I plan to discuss in future videos some of the other items in that tax planning video that I mentioned, that I uploaded a few weeks ago, which is going to be talking about meals, travel, hiring children, those different strategies, and how they could potentially save you thousands of dollars in taxes. So I'll end with this. I appreciate all the comments, all the emails I've been receiving. Some of you have been making appointments on my calendar, and I look forward to speaking with you. So until then, please do subscribe, and I'll see you in the next video.